Hey there guys, and welcome back to Alex Invests. The markets are closed today because it is Sunday. Today I just wanted to go over a little recap of what happened last week, as well as what to expect in the markets next week. We're going to go over some of the trades I made last week, what I'm thinking of making next week, and we're just going to do an investing tip as well as per usual. So let's get right into it by starting off here with some of the earnings coming up next week. On Tuesday, we have AMD reporting earnings, we have GE, and we have Microsoft also reporting earnings. So for AMD and Microsoft, it's going to give us a good idea of where this tech sector is headed right now. I think I do see good results for both of these just because we've had the pandemic, everyone's staying inside more, right? More processors and more chips are needed from AMD to sort of keep up with the demand that we have here. Microsoft again as well, selling more computers these days with everyone staying inside and everything, right? So I do see good results for them. Wednesday is going to be a big one too. Again, we have Apple and Facebook both reporting earnings. I was in Apple a while ago, but it just wasn't moving fast enough for me, so I had to remove my position there. But the biggest one here for me is Tesla's reporting earnings next Wednesday here, right? And this is really where I want to focus on because we can see we've had sort of a huge run here in Tesla, right? And this is all post split here, right? We can see sort of the huge run we've had. If we take a look here, we've run up around 128% already just since that split since October, right? So I think Tesla really needs to report some good earnings here to kind of justify this price. I do see them moving higher into the future, but that being said, for this particular earnings call, depending on how they did on the year, we could see a drop just because of the huge run up and the huge valuation we're seeing right now in Tesla. Their PE right now is 1,677. That is absolutely ridiculous. And they're going to have to post some pretty incredible earnings to kind of make up for this PE ratio we're seeing. But again, I'm in Tesla for the long term here, right? And I'm not looking to sell any of my shares. So because of that, even with a drop, it really doesn't concern me at all here. I do still want to go over some earnings and kind of see where their numbers are going though. Another really big thing coming out on Wednesday is the US Federal Open Markets Committee is posting interest rate and monetary policy decisions. And this is going to have a really big effect on the stock market, in my opinion, if they do decide to change anything, right? We've seen sort of interest rates stay at or close to 0% for the past almost year here. And again, we've had huge influx of stimulus money, and all this has been a big driver of the stock market getting pushed up so high, right, to these all-time highs. And as we see interest rates come up, and as we see this decrease in stimulus money and no more stimulus money eventually, right, we're gonna see a pullback in the stock market because it's gonna be more expensive to borrow. The people are gonna have less money to invest into the stock market, right? And we're really gonna need to see the economy actually start to recover a lot more here in order to kind of see the stock market again rally. So if the FOMC decides to keep interest rates close to that 0% or continuing at that 0%, then we're going to see likely the stock market continue to rally, especially with this new stimulus that we're seeing, right? If we see interest rates start to come up now already, then I think we are going to see sort of a little bit of a pullback in the stock market, at least a little bit, if not to a greater degree. But what do I see for this? I actually see them leaving interest rates for now still close to that 0% up until we have a little bit more recovery. And that's why I'm saying we're going to continue to kind of see a bull market here up until, I would say, end of 2021, beginning of 2022, we might see these interest rate changes. And it could come earlier, it could come later, but I think that is going to have a drastic effect on the stock market. So do watch out for these numbers. I think they're going to be really important here. And on Thursday, we have US preliminary GDP for Q4 coming out. And again, we're going to see how the economy is doing here compared to the stock market, right? And if it's not as great as we think right now, again, we might see a bit of a pullback, but just with how the market's doing right now and with sort of this new stimulus that Biden's brought out, right? And with sort of the influx in money here, and again, if interest rates stay at close to 0%, GDP for Q4 for the US is not going to have as big of an effect on the stock market as, again, sort of these monetary and interest rate decisions. All right, so let's get into some of the trades I made last week and what I'm looking at making next week. And again, Tesla, I'm not buying any more shares. I'm not selling any more shares. This is just a long-term hold at this point, right? Fuel cell energy, if we see the price come down here, then I may actually decide to pick up some more shares. Right now, we're kind of hanging at a spot where I'm still waiting and seeing what's going to happen on Monday. So this isn't a for sure one, but again, I am looking here if we see a big pullback to buy some more shares. The other thing about fuel cell is that Elon Musk actually said that he would give $100 million to the best carbon capture, and fuel cell is part of that carbon capture. So who knows, they might win this. Although I'm also in another one, Oxy Petroleum, and they're doing carbon capture now as well. So we'll see about those two. Of course, there's a bunch out there and it could really be any one. But, I do think on hopes of this, we will kind of see these stock prices continue to rally into next week as well. BNGO, again, up 18%, right? And I bought some shares right around this point here. And yeah, last week. And I do actually want to pick up some more shares here. If again, we see another pullback, if we see another share offering here, which is the reason why we came down here, right? If we see that again, then we will see the stock price come down quite heavily. And at that point, that's when I would pick up more shares here. Sun Hydrogen, again, this is one that I picked up right around here last week, and I am looking to pick up more shares come Monday here. If we see sort of a similar price here, or we actually come down even a little bit, then I will be picking up more shares in Sun Hydrogen. And then OEG also has continued its run up here, right? I said in my last OEG video, we're going to come maybe to the bottom of this trend line, and then we're going to continue our uptrend here, and that's kind of what we saw there. So that's nice, right? And again, OPTT as well. We've just seen this continue to have a massive run here. It's good to see. Again, I wouldn't be picking up shares at the 562 mark here, but if we see a pullback, then that's something I would look at there as well. I've been keeping a close eye on CCIV here as well. This is the SPAC that's looking to merge with Lucid Motors, and there's a lot of hype on this one. It's a speculative one, nothing's announced yet, right? But if we do see the price come down a bit on no news here, really watch out for that. All in all, I do see the market continuing to run next week. The biggest sector again, I think, is going to be that clean tech industry, because Biden rejoined the Paris Climate Accord and he's doing so much for this clean energy. So these stocks, I think, will continue to run. So the tip that I have for you guys this week kind of goes along with me potentially selling out one of my positions here. As we can see, these are kind of my main holdings here, with the exception of one or two others. And the reason that I want to sell sort of one of my stocks off is, again, to decrease my portfolio size, because the more stocks you have in a portfolio, the less volatile your entire portfolio is as a whole, right? And the less risky that means, because the less volatile, the less sort of ups you're going to see, but also the less downs you're going to see, right, in total in your portfolio. And there is certain upsides and certain downsides to having more stocks in your portfolio, and it really depends on which phase of life you are in. And this is the tip for you guys today, because there's kind of two phases of life when you're looking at your financials here, and the one is your wealth building phase, and the other one is your wealth holding phase, right? When you don't have that much money and you're still kind of building up your assets, then you're in the wealth building phase. And in the wealth building phase, it's okay to be a little bit more risky, in my opinion, because you're trying to build the wealth that you have, which isn't that much, right? So the higher risk you take on, you still have less to lose in those scenarios. But say you have $5 or $10 million in your bank account, then you want to try and mitigate as much risk as possible, and you're maybe in more of a wealth holding phase of life, meaning that the money that you have already is kind of at a spot where you can't lose it anymore, right? You can kind of think of it like before you buy a house here. So let's say your goal on the stock market is to buy a house eventually with your returns, right? Then you're trying to build up your wealth as much as you can on the stock market in order to purchase a house, which is then your investment, which is your wealth holding investment, right? Because the value of a house doesn't really change too much. Sure, it can go up a little bit and down a little bit, but in general, it stays relatively the same, right? And it's a very low risk asset to hold, much more low risk than some of the stocks that I'm invested in, like OEG and OPTT, for example. There are big risks associated with these companies. They are very small cap as well, and even FCell as well. But again, I don't have anything like $10 million invested, and so there's not that much risk for me to lose some of this money, right? And there's much higher potential for me to make a lot more money here. So investing becomes a lot different when you have $1 to $10 million in your bank account, or less than 1 million, or just a couple $100,000 or even $10,000. then you want to take on more risk because you're in sort of a phase where you want to grow that wealth as much as you can. And then you get to a point where you're at a happy level to hold some of that cash. And then you take the cash you have in sort of some riskier investments and put it into some investments which are less risky and may not give you as much of a return, but enables you to sort of hold the wealth you have. For example, an investment in a house. And you don't have to do this just once, right? You could buy the house and then with the remainder of the money, put it back into risky assets in the stock market. And then even if you lose all of that money that's on the stock market, you still have wealth that's being held in sort of your other assets, which are less risky, like an investment in a house or like an investment in an index, for example, right? So the tip is you have to really distinguish between what phase of life you're currently in. Everyone's wealth holding compared to their wealth building phase is different, you know? It's going to be different depending on how risk averse somebody is, and going to have to do with how much money somebody wants to make and everything like that, right? So it's all relative here. But you have to decide what phase of life you're in, because there's a big difference in the way you're going to invest your assets depending on which phase of life you're in. So you really have to figure that part out. And right now I'm still in the wealth building phase and I haven't really entered that wealth holding phase yet. And because of that, my portfolio is mainly, as we can see, sort of riskier assets here and high growth assets, right? And high growth stocks here, because I do want to grow my wealth as much as I can currently. And, you know, these are the stocks that I think are going to do that for me. So that's my tip to you guys, is decide which phase of life you're in right now and determine through that what assets you're going to invest your money into. All right, guys, so that's going to do it for the video today. I hope you guys liked it. If you did, please like, subscribe, and leave me a comment. As always, share the video too. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.